This is the reality of what we're seeing, a K-shaped economy, close to $1,000 in a month. That's not common for gold. We are getting some speculation in this space. I just kind of wrote it off as like a anomaly.
Now, what are the reasons that somebody would be holding gold or even buying more today?
So 2026, the biggest thing to understand is that
it's my pleasure to welcome to the show Darrell Thomas, host of the VRIC Media YouTube channel. He's got a great show of his own. Check it out, link down below. He's also invited me as a guest on his show, so I can put the link down there if you want to hear what I have to say during an interview. But today it's not about me, it's about Darrell, getting Darrell's thoughts as an investor. He's an investor just like you, and he's trying to navigate these difficult, volatile times, probably just like you. So we're going to get Darrell's insights as to what he's doing with his money, and hopefully we can learn from him, as well as I'll be sharing some of my thoughts as well. Thank you very much, Darrell, for coming on the show. It's good to see you.
Yes, good to see you. Good to recognize you on virtually today. Obviously at the VRIC, David had come up to me and said, "Hey, Darrell, how you doing?" And David and I, we've talked before and engaged before, but I did not recognize him at night. And sometimes a couple of adult beverages will do that to you. But I'm happy to be here.
I am fascinated by stories and articles like the one I'm sharing on my screen right now. This is from oilprice.com, and there's a contributor who wrote a piece called 6 Stocks That Could Soar in an Era of Regional Instability. Now, as you'll probably guess, given that it is from an oil site, the first one is an oil company, Occidental Petroleum. Number 2, Realloys. Number 3, Lockheed Martin. Okay, well, that's gone up a lot. CF Industries. Number 5, MP Materials. Number 6, Palantir. Now, we are not going to... The purpose of this conversation is not to discuss these thoughts. It's to get your take if you were to write a similar article. So what are your picks, your top picks for regional instability, which seems to be the theme du jour of March?
Yeah, regional instability. My top pick is gold. I think, with the amount of de-dollarization that's still happening, I believe that this conflict that has escalated with the U.S. and Iran will continue to drive central banks out of the dollar and such. And so that's my top big pick is physical gold. And then obviously, I'm also into the gold related equities. I think that the gold price is not reflecting this geopolitical crisis. It did run up to front run it, but obviously it's sold off a little bit and it's been leveling out. So that's my top pick. I'm always going to advocate for sound money. I always advocate for money that the governments can't print, and so that's my top pick. When it comes to oil, I'm obviously looking at what are some of the plays that are not getting a lot of love. Obviously, we see the stocks on that particular list. Many of those stocks have made significant highs and such. We see the big major producers, Exxon and such. They have run up since this conflict. And so I'm looking at some of the oil royalties and such. So I have a little bit of exposure to oil through Franco-Nevada, which is obviously a gold, majority gold and silver royalty company, but they have some oil royalties. And then also Viper Energy. That's something that I'm investing in as well. So oil royalty company. I also have some land royalty companies that pretty much lease land to some of these oil companies, such as Texas Pacific Land and as well as Landbridge. And so those are some of the companies that I've kind of dove into because they have a lot less risk than some of the other companies that we see on this list. And so those are some ways that I'm playing this conflict.
How do the land leasing companies work? How do they make money?
Well, yeah, pretty much. They buy land, they have the infrastructure, and the oil companies that do the drilling and such, they have to lease the land. So you're pretty much paying the landlord to operate as a business. And so that's the same thing that I kind of use with even some of I've been buying the exchange stocks, such as the exchanges that own the New York Stock Exchange and such. Because when you think about it, a lot of people think about the stocks themselves or the cryptocurrencies themselves, and they don't really think about the companies that operate to where you could trade those cryptocurrencies or stocks. And I got this analogy from my friend Benjamin Damazi, where he talks about, think about it as owning the roads and the toll booths toll booths rather than owning the cars that are driving on the roads in the toll booth. And so that's kind of been something that I've been adding to my investment philosophy and such as of recent months.
I want to talk about gold first. So you have a sizable allocation of gold. First of all, since when have you been invested in the precious metal?
Let's see, started buying gold in 2020. That was at the height of the pandemic, everything shutting down and everything. And that was when I started learning about it too, at the same time. And so as soon as I learned about gold, I picked up the thesis very quick. I picked up the history very quick. It was simple. All I had to do was make a purchase and buy the physical gold and store it. And so that was the easiest way for me to get started. And so I've been buying since 2020. I'm actually still buying today because I think the gold price is going a lot higher than where it is today, considering the amount of debt deficits. We've had, I'm a United States citizen. So we've had Doge come in and absolutely fail. They canceled some future contracts or whatnot. So I guess they saved Americans money or whatnot. But I knew they weren't going to be able to cut 2 trillion. And so that's another bullish reason for why I'm owning gold, because the deficits are going to continue to rise. President Trump said he's adding another 500 billion to the military budget. I think he wants it at 1.5 trillion and such. We're still paying a significant amount of interest on the debt and such. And so I just don't see no way out of this. And so for me, it's all about becoming my own central bank.
Think back to the moment in 2020 that persuaded you to buy gold. Just remember that moment. Tell us what it is, and I'm going somewhere with this.
Yeah, so I started by reading Rich Dad Poor Dad, and then I started going down the journey of Robert Kiyosaki, and I started going down the journey of watching his YouTube channel where he was bringing on some of the guests that we interviewed, the Lynn Aldens, George Gammons, and such, and they pretty much would lay out the case for gold. And so then I began reading the book, The Power of Gold, as well. And so it was a collective of moments that really brought to my mind, like, okay, well, one thing is it's something that's outside of the financial system, in which we know that the financial system is controlled by elites, politicians that serve their own interests, especially thinking about during COVID, when they were bailing out the airlines and these big corporations, which is anti-capitalist. And so for me, it was like, okay, let me go ahead and buy something that's outside of the system, that's hard money, that's been around for thousands of years. I mean, gold is mentioned in the Bible. It's mentioned in multiple historical books and such. And so, and it stood the test of time. So that was the reason why I decided to park some of my capital in saving gold.
Before we continue with the video, let me tell you about gold's performance relative to the rest of the markets. Now, gold's up about 80% over the past 12 months, while the S&P 500, for example, is up only about 16% in the same period. Now, that's not a small gap. That's a huge difference. So if your retirement account is concentrated in equities or any one particular asset class, well, that difference directly impacts your long-term trajectory. Because when gold dramatically outperforms during volatile equities markets, it often signals capital rotation, not noise. Right now, that rotation is visible. Major banks are already outlining gold scenarios in the $6,000 to $6,300 range, and this isn't about abandoning stocks. It's about whether your IRA or 401k has exposure to the asset that's actually gaining momentum right now, or if you're fully dependent on equities or any one particular asset going higher. Today's sponsor, Priority Gold, created a free precious metals playbook explaining exactly how physical gold or silver can be added to your IRA or 401k tax and penalty free. They handle the rollover paperwork, and with qualifying purchases, they're offering up to $10,000 in free silver. To get your precious metals playbook, call 866-407-6456 now, or text David, DAVID, to 24999. Scan the QR code here or use the link in the description down below. The reason I asked you this question is I want you to think about right now. So you bought gold in 2020, and anybody who's bought gold in 2020 is up, let me just see, 240% in the last 5 years, assuming, well, actually, that's the high of 2020. If you had bought in the beginning of the year, That's 250%. Anyway, you were up a lot, assuming you didn't sell. Now, what are the reasons that somebody would be holding gold or even buying more today? Because those reasons you talked about were 2020's reasons. What about 2026, Darrell?
So 2026, I mean, the biggest thing to understand is that the global monetary order is changing significantly. And Ray Dalio talks about this a lot. And he's been on the World Economic Forum and many of these places where he's trying to educate people on this. And so when we think about these systems, when Bretton Woods was agreed upon to Nixon taking $1 off the gold standard, these are huge events. And right now, when you see central banks around the world that have the most capital buying tons of gold, right, that has to be a signal. They are doing this for a reason. So I think that oftentimes the average people do not get this information until it's like too late, or the gold price moves up significantly. So I've been following, central banks buying gold since 2022, and so for those that haven't been following that, they may see the gold price. Oh, well, it's moved up 200%. Well, the thing is like, you got to view gold as money itself, right? And fiat currencies as currencies. And so that's how I view that.
How high does gold have to go before you start taking profits or say enough's enough? I just got a chart up here for reference.
Yeah. So one thing is, I don't really look at the price of gold as far as physical gold. I look at the miners. So that's where I want to maximize my fiat savings in the gold miners. And so that's the way I look at it.
Sorry, what does that mean? You don't look at the price of gold, so you don't care if it goes to 6,000 or 7,000. You're holding either way. Like, you're never going to sell.
I'm never going to sell unless, if gold in, let's say if the Dow to gold ratio goes to 1, I may sell some gold for the Dow. If the S&P to gold ratio, significantly declines, I may sell some gold for the S&P. So it just kind of depends on what other assets do in relation to where gold is, because gold does have these times where, it gets very frothy. We saw that back in January at VRIC, right? When folks were like, silver's at $117. And then, a couple of weeks later,
let's start a conversation about this. I'm not, just full disclosure, I'm not invested in any of the public companies. I don't hold gold myself. I've been pretty public about the fact that I don't hold metals, and that's because I'm personally investing in my own business. So that's my investment. But the other thing is, right now, this is feel free to debate me. Right now, I wouldn't buy any gold at current levels. That's just me. I'm not saying that there's not going to be a chance for it to go higher in the long term, but I'm waiting for a pullback. If you look at the charts here in 2011, gold has done exactly what it's doing now, which is double top, fall by the order of 16, 20%, go back up a little bit, right? And then fall another 50% and stay low. It did that in 1980 as well, right? You got this double top, went down 50%, went up, and then it went down another 70, 60 something percent and stayed at the bottom. So it's become less and less volatile over the past couple cycles, but look what happened in the last couple of months. So top, then it went down 20% in the beginning of February when I first saw you at VRIC, and then now it's climbing back up, which is the same pattern that it was exhibiting in late 2011. So I'm looking at this, and it's done the exact same thing it's done in the last two bull cycles, and I'm thinking to myself, well, history doesn't repeat, but it might rhyme, and I'm waiting for that pullback before I get in on some more. So that's my theory. What do you think? Feel free to disagree.
Well, I think some people waited for a pullback when it was at 3,000 and 4,000, and many people were saying like, "Oh, it's going to pull back. It's going to pull back." Mm-hmm. And so, at what point does someone, think that, okay? Because the thing is, like, you can't time tops or bottoms, right? It's, no one's perfect at that. I think those who have claimed to do that may have gotten lucky or they're lying, but. Right. the thing is like, okay, even if I have a sell off, for me, it's like, okay, I'm continuing saving my money in real money. I'm trading fiat for real money. And so that's how I view this. And longer term, we could see, with the amount of debt and deficits, right? You got the off balance sheet liabilities of many nations, but the U.S. in particular, I mean, you got over 100 trillion in off balance sheet liabilities. So, me looking at that and looking down the line, it's like, okay, well, I want to make sure I'm out of these fiat currencies because we know that the fiat currency is going to lose value over time. And so for me, I made it a habit of buying gold. And so obviously my cost per ounce continues to increase at these levels. Yeah. And I'll buy more when it does fall. But I think that, people that have said, oh, gold's at 3,000, I'm going to wait for it to sell off before I get in. Then they hit 4,000. I'm going to wait for it to sell off to get in. And so now, I mean, people are repeating that same thing. And they have to consider, okay, well, what's the price point you're going to get in? And what is the reason you're getting in, And so you could even buy a little bit and still hold some liquidity. And then if we do get a sell off, load up the boat even more. So I think that there's multiple ways to think about that.
The common argument against Bitcoin as a savings asset or a store of value is that it's very volatile intraday and over the period of, let's say, a rolling average of, let's say, a couple of weeks to a couple of months, okay? That means that it moves up and down a lot in layman terms. So the argument for holding gold is that it doesn't do that. However, we just saw it do that this year. It went down 20% in one day. Not that it's a common occurrence, but when it reached the top of $5,500, it went down 20% the day after. Now, Darrell, when you see an event like that, does that kind of change your sentiment on holding gold long term, or not so much?
No, it doesn't. Not so much because I mean, when you look at any other metric, you see that that average retail investors are coming into the space, but it's not exuberant to that degree. I mean, because the miners are still relatively cheap. When you look at their all-in sustaining costs compared to what they are selling every gold ounce that they produce for now. And so when we saw January, you could see that gold moved up over what was like close to $1,000 in a month. That's not common for gold. So when you look historically on how gold moves, you would see like, okay, it doesn't typically move up $1,000 in a month. And so for me, when I was watching that, I saw, yeah, this is getting way too frothy. We are getting some speculation in this space and such. And so I just kind of wrote it off as like a anomaly. I mean, $1,000 in a month for gold, that's a lot.
Fair enough. And what type of investor would you consider yourself if you were to characterize your investing style?
Yeah, so I'm probably conservative / risky. I mean, there's a component of me that wants to compound over time, which I believe is important. Also, I know that when you look at the risk rewards, I mean, I'm invested in some of these junior exploration companies, right? And those are some of the riskiest companies.
What's your time horizon?
Time horizon on that, I think probably I'm willing to hold for the next three years. To see what it happens. So I'm kind of always watching the markets, so I think 3 years we'll see many investors come into the gold mining stock space. And so that's kind of my time horizon for those.
Okay. So when you buy mining companies, let's talk about maybe the junior space. Are you banking on a takeout? Are you banking on them, just finding more deposits? Are you betting on them eventually heading into production? Like what's your thesis for buying juniors here?
Yeah. So, I mean, obviously, you have some developers, some exploration companies. The way I kind of approach it is I follow the big money. So I'm looking at what is Fiore Group doing? What is Frank Juster doing? What is Rick Rule doing? What is Eric Sprott doing? So I'm always kind of looking at the big money and seeing which companies have big money that are backing them. So that's like one piece where I'm always looking at the percentage of shareholders, with institutions and such. And so I'm looking at the big money. And then I'm also, obviously looking at, okay, what's the project? Is it a safe mining jurisdiction? Is it, and does the CEO have a certain degree of success? What's the track record of the CEO and such? And so, when I'm, at VRIC, I was on stage with Ross Beatty and Bob Quartermain, who have had significant success. So it's like, okay, well, those are some CEOs right there that I'm willing to, bet on, so you have to, like, for me, it's really looking at, okay, who's running the company? Where's the company located? And also who's backing the company. And so those are kind of ways that I look at it. But I'm also mostly in the royalty and streaming space because it's a lot less risky than some of these junior exploration companies and such. And I have more exposure there.
The notion that fiat currency is going to continue losing value, which is what you said earlier. Why do you think that is?
Yeah.
Why do you think inflation can't stabilize?
Well, I think that politicians always want to print. They will always want to overpromise. And right now we're experiencing the triumph of politics, if I were to quote David Stockman's book, where politicians they have to serve their constituents, right? And their constituents want free stuff, essentially. They don't want higher taxes, and such. And so to try to come in and be, to drain the swamp, instead of adding swamp creatures to the swamp, and then try to balance the budget, to cut entitlements and things like that. That's political suicide. And no politician that wants to be successful is going to do that.
We're both living in Canada. Last week, the jobs numbers in the U.S., 90,000 jobs lost, wasn't looking great. And people often talk about how the Canadian economy and the U.S. economies are slowing down. Do you feel any of that personally? I'm going to tell you personally that I was just out east in Montreal, made a trip there. I was living in Montreal for 14 years. I'm currently based in Vancouver. Haven't been back to Montreal since last April, so it's been a year. Now, a lot of my favorite restaurants, bars, cafes, small businesses, a lot of them were closed. In fact, I was just shocked at how many stores got closed and had, big planks of boards over the front. And I was talking to some people there who know the economy better than I do. First of all, it's very seasonal out east. When there's a winter season, people go out less. People were recovering it's March. People were just recovering from their winter holiday spendings. And it's also spring breaks. A lot of people are away. But business doesn't close just because these factors. They close because business has been good for several months. I was out on a Friday night at a popular bar, and that bar would have been impossible to even get in or book on a Friday night. I walked in, it was half empty. Again, spring break, but I've been out spring break. It wasn't that quiet. That's just my personal assessment. I just noticed that people were spending less money on discretionary items. And if I were investing in the market right now, I rotate into consumer staples. I rotate into, let's say, things that haven't gone up as much as gold. Let's say the small caps, Russell 2000, and the mid caps. So that's my observation. What do you think is going on in the economy based on what you've observed in your personal life, Darrell?
Yeah. So, obviously, I live in the U.S., so it's a little, we kind of have similar circumstances, but they are different in some ways. But, I have some friends who are struggling, to make ends meet. And, I was a good friend of mine that I've known since he was a kid. Been in and out of jail, struggling to get a job, and stuff. And then he finally got a job at pretty much a fast food restaurant and such. And so, yeah, I definitely see the pain, on the streets that average investors or average people are experiencing with higher cost of living and such, wages not keeping up with inflation and things of that nature. And so when you think about it on the macro scale, we hollowed out our industrial base. We've printed money. We've bailed out banks and such. We've devalued the currency significantly. And this is the reality of what we're seeing, a K-shaped economy. And so, oftentimes when I see these kind of arguments with, the boomers, they hold majority of the wealth and such. And I see people comment things like, oh, well, they were able to do it, you could do it too, right? And I think about it, I said, well, if you look at the macro and the situation that many of the boomers experienced. They grew up in an America that had way less inflation. The dollar had way more value and such. I mean, home values were significantly cheaper. Government debt and deficits were a lot lower, and such. And so they grew up in an era where they benefited, and so now you're getting kids coming out of college who can barely find a job, or can barely find a job within their field, or find a job that can pay the bills. And so, yeah, it's definitely a problem.
So you host a show, VRIC Media. You've had a lot of really smart guests on. What's a common message you've been hearing in the last 2 months?
The last 2 months, one thing I didn't really pay attention to, but it was mentioned a few times in some of the conversations I had, was about the Iran conflict. Some really good geopolitical analysts that we've had on have been calling for this, and so that was something that kind of made sense to me later. It was like, oh, this is what they were talking about. Other consistent themes is obviously de-dollarization, and how the world is shifting back to sound money, and we see that in the data. And I'm looking forward to the conversations I'm going to have with Silver Institute and a representative from the World Gold Council on that. And so we see that in the data, right? And so those are the common messages.
Are you looking for specific indicators that may tilt your investment style or strategy one way or another? In other words, what are you asking guests these days that would benefit you as an investor?
I'm looking for the hated assets. And so you and I, we're friends with Rick Rule. Rick Rule is a mentor of mine, and he's been talking about oil being a hated asset for a long time, right? For months. And so, I pay attention to that when someone of his caliber, says something of that nature. And so when he said that, and then now what we're experiencing, we're seeing like, oh, this hated asset, it turns out to be one of the global cornerstones, of one of the cornerstones of the globe, as far as economically. And we could probably see, $200 a barrel oil in this conflict and such. I mean, even the Iranian army military person came out and said the world needs to prepare for $200 barrel oil. And so, yeah, I mean, it's something that I think is serious. And in the macro landscape of that, I'm looking at the 70s. Okay, what happened in the 70s? You had job losses and you had high oil prices. And so, we could see a stagflationary environment. And so I'm just looking at how to position myself in a way that could even benefit from that. But there is a lot of uncertainty right now, and you got to be nimble. So I'm holding more cash nowadays in T-bills, short duration treasuries, so I can earn a yield and just see what the market does. Because right now there's a lot of volatility, and I'm just trying to see, okay, what direction is the market taking?
You live in the U.S., so tell us, Darrell, what do you think the government should be spending money on that could help regular citizens?
Government should be investing in our infrastructure, our grids, things of that nature. Also investing in mining the stuff that we need. Obviously, if we are, relying on China, who refines about 90% of the world's rare earths, and these are critical minerals to the livelihoods and global militaries, we need to be investing in that. That's one thing that I can, give credit to President Trump for, even though, I'm not a guy that's very fond of politicians, for him to even bring that into conversation and to have those conversations. Now, do I agree with the trade policies? Not necessarily, but, I do think that we need that infrastructure, and we need that investment back into those jobs to where people can, people used to be able could work a job and take care of the whole family and afford a home and such, when these jobs were here in the U.S. But as far as reshoring, I just think that it's going to take trillions of dollars. So, there's going to be a lot of money printing that's needed for that.
I'm going to finish off on a loaded question. How is it that 50 years ago, the average American household could have been supported by one person working, and they could have had multiple cars, and people could have bought a house straight out of college? And I had a guest on, Steve Hanke, professor of applied economics, Johns Hopkins, who my audience may be familiar with. And he told a story of how when he graduated from university, he was able to save up the money from just working 3 jobs during college to buy not just one apartment, but an entire apartment complex right after university out of his college savings. That's an extreme example, and I'm sure he worked hard, but then similar stories could be told in the 60s and 70s as well, when people bought homes at a much younger age. People were able to start families at a much younger age. And now, because of the unaffordability crisis, we have people actually delaying family formation because they're not able to afford a home and even start a family. How did this happen, Darrell, if you had to sum it up?
Yeah. Well, obviously you had globalization that contributed to it, and many jobs were sent overseas. And in that same token, wages have not kept up with inflation and the loss of the purchasing power of the dollar. And so, you have all those dynamics. And currently, we have some different situations where people are living longer. So the wealth, that the baby boomer generation has, we keep hearing about the word wealth transfer. But, when you think about it, okay, well, now people are living to their 80, 90, right? And so, so that wealth is still, tied up in a lot of ways. And so, those are some of the things that I think are happening and how it compares to now.
I wonder if we're ever going to go back to those days. I don't know. Comment below. What do you think is going to happen to the future of American society? And as always, thank you for watching. Where can we follow you, Darrell?
Yes, you can follow me on X at Money Levels, plural, show, Money Levels Show. And then also you can check us out on YouTube at VRIC Media, VRIC Media. And that's where we're doing interviews, such as interviewing you yourself, David Lynn. So I hope to have you back on the show too.
Right. All right. Thank you very much. Appreciate it. Darrell, was a lot of fun. And thank you for watching. Don't forget to like, subscribe, follow Darrell, comments down in the description down below.